So the first secret that we're going to talk about today is called the self-employed secret number 1, entity selection. And in the entity selection, this is obviously one of the first decisions every business owner has to make, whether you're starting a new business or acquiring an existing business. And on the entity selection, I'm just going to give you a couple examples of some major considerations that you need to have before making that critical decision as to what type of entity you're going to select to put your business in. And we've got a couple entities, as you know. We've got a C corporation, an S corporation, a limited liability company, or I'm going to refer to as an LLC, and then of course we've got a sole proprietorship. And the S corporation, I can tell you one of the biggest advantages of an S corporation are the payroll tax savings, because in an S corporation, you pay payroll taxes only on the W-2 salary that you withdraw from a business. You do not pay payroll taxes on the remaining part of the earnings that flows through out of an S corporation as subchapter S dividends. Let me give you an example just to clarify this. If your S corporation made $100,000 for the year, but your salary, your reasonable compensation was only $30,000, you'll pay payroll taxes on that $30,000, which will be around $4,500. But that extra $70,000, the remaining $70,000 of the earnings over and above the 30, that $70,000 is not subject to any type of payroll taxes, not unemployment insurance, not Social Security tax. And so just alone, that $70,000 for someone in this example can save you over $10,000 in payroll taxes. That's a significant savings for someone. So S corporations are very common. Many businesses operate out of an S corporation. They've got liability protection just as an LLC or C Corp has. But one of the significant advantages has to do with that particular provision in an S corporation in the IRS code, which allows the excess earnings not to be subject to self-employment tax. Now, another type of popular entity is the limited liability company, or LLC. A limited liability company is really flexible in that you can have many different types of members. A C corporation can only have individuals, certain types of trusts or estates as far as the members. An LLC can have other partnerships as members. It can have corporations as members. It can even have qualified retirement plans as members. Okay, so you can have many different types of members in an LLC. And many of you, when you're going to form your entity, if you're going to be raising capital or have as stockholders some of these other entities, then you definitely want to select an LLC over an S Corp, because an S corporation is very restrictive as to the type of members it allows, okay? A C corporation, one advantage of a C corporation is that the lower earnings, especially up to $50,000, up to the first $50,000 is only subject to a 15% tax rate. And the next $25,000 is also subject to a lower tax rate. So you can actually accumulate more cash, pay less taxes as a C Corp when your goal is to retain earnings for growth. So many times retail businesses, some other types of businesses, manufacturing, I'll have them operate as a C corporation, and then once we've got to the point where we have retained enough earnings and we have enough cash flow to sustain ourselves and we're making profits, at that point I may convert them over to an S corporation, but not until we've actually accumulated those earnings, and they can be accumulated at a lower tax rate than maybe an S corporation or an LLC. Now, it's also important on a C corporation, there's a technique you can use on a C corporation that applies not in every case, but in some, and that's called a medical reimbursement plan. That medical reimbursement plan, I had 2 of my clients last year. They were able to deduct over $45,000 in expenses that would not have been deductible had they written it off on their personal tax return. But that medical reimbursement plan allowed that C corporation owner to deduct those expenses. Let me just give you one example. LASIK surgery, okay? LASIK surgery for many insurance companies, most is not covered by any type of insurance, so it's completely out of pocket. If you're a C corporation and you have a medical reimbursement plan, you can deduct the LASIK surgery, let's say $4,000, off your C corporation tax return. You can't do it if you're an S corp or an LLC, but you can do it as a C corp. All right? Another advantage is that I had an LLC client who was a car dealership, grossing probably $30 to $40 million a year, but losing money. The fact that he was an LLC in the state of California, there's a gross receipts fee. That individual dealer because they had 2 car dealerships, paid an extra $12,500 in LLC gross receipts fee in the state of California, or a total of $25,000, more than $25,000 in fees that he did not need to pay had he been an S corporation. So we converted him to an S corporation, stopped the bleeding. We stopped the needless payment of these gross receipts fees, and needless to say, he's been in this situation for the last 5 years. So he paid over $100,000 in fees unnecessarily, totally avoidable, had he not been an LLC. A sole proprietor is the last type of entity. A sole proprietor, one advantage is it's very easy and almost no expenses to set up. You can basically go down to your bank and open it up, even your social security number. Okay, if you have employees, you need a federal ID number, but if you don't, just your social security number, you've opened up a bank account as a sole proprietorship. So it's very easy to set up, has no liability protection, and it also does not allow any other partners or investors to come in as owners with you. Okay, so sole proprietors are pretty common when people first start the business. But then once I've had businesses take off and start accumulating earnings, in order to protect the individuals from liability, and also for ease of raising capital, and also ease of even getting bank financing, we usually convert them over to one of the other 3 types of entities that I've talked about before. So there you go. Those are the most common types of business entities. I hope this helps you, and this should certainly make the selection a little easier for you, because now you've got some basic knowledge that you can use when having to make this first and very important business decision.